What's up, players, traders, and haters? Welcome back. It's your boy D, and this is D's Daily DD. All right. As you know, the due diligence channel. And today, right, I'm excited to bring y'all some new information, right? Some logical information that I've been thinking about over the weekend. And again, I put a lot of time, a lot of effort, a lot of research into this channel, and I do it all organically, all right? Shout out to the subscribers. We're catching some momentum. I see new people coming in and subscribing, and you don't know how much I appreciate that from the bottom of my heart, for real, because when I started this channel, I didn't know what to expect, right? I just wanted to come out here because I felt like I could educate some people, some retail investors, help them out, right, with some knowledge and so on. But remember, I'm not a financial advisor, right? This is never financial advice, right? So don't take it as that. Take it for educational and entertainment purposes only. All right, guys, and I want to remind you, right, that this is all organic, right? I haven't paid for any subscriptions or subscribers. I haven't paid for any views. I haven't paid for any promotion or like fake bots, to come in here and subscribe and like the channel, right? I just do my best to give you an honest opinion, my thoughts, and to gather public information and break it all down for y'all, right? In my opinion, from my perspective. And I see that, now I have over 300 people, right? We're trying to get to 500 next. So if you want to do me a solid, hit that subscribe button, guys, as we grow the family again, because it's all organic. When I first started, I didn't know what to expect, and I just knew that I had to work at it. I didn't expect anything to happen overnight, right? But now I've laid down the groundwork. We have a base, and it's fun to interact with the people and comments and see what everyone is thinking out there, right? And to those people that watch my videos, you don't know how much it means to me. It's all good. Thank you for the support. Okay, so yeah, today, I needed to bring up some information on AMC. I need to bring up some information on Ape, and then we're gonna do a little bonus at the end, all right? Because there is a stock that again is catching some momentum right now, and I think it has some room to run. All right, so we're gonna talk about that too. And yeah, guys, I hope you had a great weekend. I took a lot of time just to look at things and to research some more, especially on what Ape is exactly, because I saw all the proof that I needed last week, right? There seems that there was a lot of issues with the brokers and just the distribution of Ape. And then you have, Adam Aaron tweeting a lot, giving us, hidden messages, like how people like to say on the internet. All right, if you want to break those down, right, like if it's in code, all right, because it's just kind of random tweets over the weekend that seem to have some information in there that could be, helpful to us and so on. But yeah, guys, so of course, I have some information on the whiteboard today, because that's, I think, how people can pause and learn and watch and listen to what I'm talking about and what I'm trying to get through, right, as far as the information. So yeah, guys, that's my intro. So right now, let's go over, some things, because my goal is to always get you, education and some information that brings value so that you can learn and we can all learn. All right, guys. So let's first, let me pull this up. This is what I want to talk about, and I'm going to explain all this right now at the end, but I want to show you guys first the proof. All right. I took the weekend to learn about preferred stocks, and I'm going to put this link in the description down below if you guys want to go read it yourselves. But I do have, I learned a little bit more. So what do you need to know about preferred stocks, right? So why is preferred stocks important? Preferred stock gives you a financing alternative to taking on debt for AMC, right? You generally maintain greater control over your company than if you issue new common shares. You can also remain flexible for future financing rounds by keeping debt off your balance sheet and retaining a call option. The call option allows you to reduce your outstanding equity and offer a greater portion of your company. So there seems to be, I don't know if this is true right now, but hey, maybe AMC and Adam Aaron, they're holding a call option or call options on Ape. Even though it doesn't have an options chain, preferred stock can work as a bond as well. So there could be, terms and conditions in the fine print. So preferred stock may carry optional features that benefit either the company or the shareholders. These are set out in the initial preferred stock agreement. So we would have to look into the fine print. But for now, right, for the preferred stocks, callable. A call option gives you the right to repurchase preferred shares at a fixed price or par value after a set date. So remember that par value of the penny? That's what's interesting, right? Or it could be a fixed price, like say AMC wanted to, come back and repurchase all the Ape shares at $10 or something like that, right? For example. That could be in the fine print. Cumulative. You may retain the right to suspend payment dividends if preferred stock is designated as cumulative and the suspended dividends accumulate and you must later pay them in full. Participating. A participating feature gives preferred shareholders a right to receive a share of dividends paid to common shareholders. This in addition to preferred dividends. Convertible. Convertible preferred shares may be exchanged for common shares. This may happen at the option of the company, the shareholder, based certain financial conditions. Yeah, remember there is a chance, a possibility that there's going to be a vote and they're going to want to merge APE and AMC. That's a possibility, right? For down the road. We don't know yet. Voting. Most preferred shareholders have no voting rights under nominal circumstances, although we do know that APE comes with an equal vote. Like if you have an AMC vote, right, an AMC share, you're going to have an APE share that has the same one vote, feature. Adjustable rate. The dividend may vary based on external factors. This provides protection against changes in inflation or interest rates. What's happening right now, the interest rates are rising, right? As far as like the Fed, they're raising interest rates. Preference. If the company has multiple issues of preferred stock, the preferred stock may be ranked by priority, with the highest being prior, followed by this preference, second preference, etc. Trust preferred stock. A form of preferred stock that can act as debt from a tax perspective, but seen as common stock on the balance sheet. So reasons to consider using preferred stocks. Companies typically, AMC, right, issued preferred stock for one or more of the following reasons, right? Most of the time, these are the reasons. To avoid increasing your debt ratios, preferred shares count as equity on your balance sheet. And this is important because remember, Adam Aaron has stated in his tweets that APE can act as a currency, all right? And I'm going to show you guys all the proof right now. But first, let's just start off with this, right? To pay dividends at your discretion, right? Because dividend payments are typically smaller than the principal plus interest debt payments. Because a call feature can protect against rising interest rates. Because preferred stock is generally purchased by institutional investors who make large investments. Remember those ETFs, right? When Adam Aaron was stating that, they have to buy. Well, here it's most of the time, right? You're going to have large institutions that want to buy, preferred stocks. To preserve the voting rights and control over your company, to avoid diluting shares earned with sweat equity, right? So because we voted no on the AMC dilution and so on, that's why I believe he went this route, right? Reasons to consider not using preferred stock. Dividends paid are non-tax deductible. Preferred shares have limited potential to appreciate in value, and investors may not pay as much as they would for common shares. Common shareholders can't receive dividend units. Preferred dividends are paid in full. This includes accumulated dividends under a cumulative feature. Payments to shareholders to key employees above reasonable salaries may legally be considered dividends. Common shareholders receive lower priority than preferred shares in the event of a liquidation. I told you guys that last time, right? Preferred shares are actually on top. They're more, what is it called? That's why they're preferred, right? Because they have that feature to be above the common shares as far as priority. Some states may impose a tax-based number of authorized outstanding shares. There's typically no tax on debt offerings. So preferred shares are issued in a smaller manner to common shares. Investors purchase shares at the offering price and the company receives the funds. The terms of the offer include whether of the features listed above apply. Investors generally have the right to buy and sell preferred shares in the public or private stock markets. The company may also repurchase shares at the current market price if the investor agrees to the sale. All right. The company may repurchase the shares without the investor's consent if the stock is callable. And I think it is because remember that was in the fine print. People on Twitter have been talking about it, that, he can recall the shares whenever he wants. So I believe that also relates to the shares being callable. A small number of preferred stock agreements have a maturity date at which time the company must repurchase the shares from the investors. And if the company goes out of business and is liquidated, debt holders will be repaid first. Next, preferred shareholders will receive any outstanding dividends. All right, and we already know this doesn't really matter right here because, APE is already active. It's already on the market. It's just the steps to issue it. All right, so I wanted to bring this information to y'all, and then we're going to go into the internet, right? So let me show you the proof, right? I'm going to show you what I'm looking at on the charts here. I had to rechart, right, everything because of the adjustments. And this is my macro line here, guys, and I believe we are bouncing off of it, right? We haven't come all the way down to touch it. We don't have to, But what I want to pay what I want to put in front of you is that check this out, right? Every single time this happens, we get this run, it comes back and it bounces, and then it finds support, right? And then it takes off. And it's happened again and again. One, two. So this would be the third time, right? Because in my opinion, it's an algorithm, and you have this algorithm, boom, it's going to come back. And then what I expect to see is a run. There's multiple reasons why I expect a run. The RSI is already down low. It's already ready to come back because it just doesn't, stocks don't just go down forever, and stocks don't go up forever. You have the RSI reading this right now, and it's at the bottom right here, right? And so that's what I'm looking at on this chart. As far as ape, we only have a week of history, trading history, and I'm on the 30-minute chart here. Just some real simple stuff. This is the resistance I'm looking at right here. It was acting as support for a little while, right? We bounced off of it, came up, tested it, was on it, and then right here, we had a huge short attack. In my opinion, that's what brought the price down so dramatic here. And now we're gonna hopefully get back and reset. This is the super trend. So this is the longer we go out, right, the better, because this super trend has to come to an end, and eventually we're gonna get a green reversal and start making our way up. Now, what I do want to point out is the OBV. We go down here. I need to stretch it out a bit. But again, we're starting to see some divergence because this was following it to a T. When this dropped, this came back up. The OBV, right, the money was following it, and now it started to drop. And it should have dropped more, right? You see the share, the sell-off right here. It should have dropped back down, right, if it was following it. But in my opinion, that's when they're dropping, fake shares and so on, short attacks, and that's in my opinion what's happening there. Now we're at 18.9%, right, for the cost to borrow fee on AMC, and then we're at 20. Let's see, that's AMC again. And for ape, we're at 25.62%. That's key because, like I've said in the past, right, usually it comes to a point where the cost of borrow fee rises so much that the shorts have no choice but to start closing some of their shorts out because it's so expensive on that, with that cost to borrow fee to keep that position open. So that's why I believe it's correlated where, you see that once the cost of borrow starts to fall again, then I expect a couple days later the price to start moving up, because that's what's happened in the past, right? And I believe that it's directly correlated, and it's because it has to do with the shares that are available, right? So for ape alone, today alone, here's the proof. There was 10 million shares available supposedly, right? And somebody took 9.1 million shares in total. Maybe it wasn't just one, but they borrowed 9.1 million ape shares. All right, so I thought that was interesting because that's a lot to borrow, and that's a lot to try to have in your pocket as a short in order to keep the price from moving up. Here's the proof, right? This is today. You have ape. There's 132 million shares on loan and an estimated 25.76% short interest. It was at 30% on Friday, which is, it's just an estimated, but that's a lot of a 5% difference without seeing any movement in the charts today, right? Because if they're supposedly returning and covering shares, then you should see the price going up. So that's what's interesting. You got the cost to borrow here on ape. Just gonna go down the line. AMC did set a new all-time high as far as the shares on loan today, so that's important. 195 million shares on loan today. Here's the proof from Cat Striker, right, one of the OGs. And then free float. How is this possible that 38% of the total free float is on loan, right? Still doesn't make sense to me, because I have my share lending off, and I hope you guys do too. Estimated short interest on free float 21.52% on AMC. And here's the proof, right? So I wanted to bring up this tweet. Most important, apes give AMC a vital new currency to pay down debt. That has to do with the preferred equities, right? That's what I'm trying to explain to you guys. All this fundamentally and deeply strengthens AMC. Not that I'm in AMC for fundamentals, but we need the company to stay open, to keep the doors open, right, in order for there to be a short squeeze. Now, if you want to check out some movies, this summer's record-breaking return to cinemas, we're doing it by offering a thank you to moviegoers. that made this summer happen by offering an extra enticement for those who haven't made it back yet. So $3 tickets on 9/3, which is this Saturday, right? If you want to go check out a movie that you haven't seen, or the $3 tickets, guys, it's a pretty good deal. And there has been no margin calls due to COVID exemption. We've all been screaming margin call, yet nobody understood that everyone was exempt from margin calls due to the exemption. This exemption ends September 1st, and then margin calls open up. 50 million to 50 billion will come quick. This is a post off of this announcement, right? Trade Trades and AMC Bigums are going live tomorrow at 10 p.m. Eastern, and they will be live. I'm too stupid, he's saying, and he knows a ton about it. So stop by if you'd like to learn about Phase 6, right? AMC Bigums has been big on this. It has to do with the derivatives market. It has to do with the options. It has to do with the worldwide. The worldwide options market. And AMC Bigums looks like he's going to be, spending some time tomorrow. So I will try to be there as well. Phase 6, in my opinion, is good for the apes. Okay. Now let's get out of here real quick and touch on this, so we can start to wrap this up. But AMC and ape update today. This is it. Let's go. AMC cost to borrow, guys, 18.4% right now. Ape, I already showed you, right? This is my breakdown though, my summary. And 25% cost to borrow fee on Ape, and they borrowed 9.1 million shares today. Why are the shorts borrowing so much, right? Why are they trying to hammer this down so bad? Why are they borrowing so many shares? In my opinion, because they're scared. They want to keep the price down as much as they can. AMC, 195 million shares on loan, which is an all-time high, guys. 38% of the free flow is on loan with a 21% short interest. Ape has 132 million shares on loan at that's 26% of the free flow on loan with a short interest of 25.76. So in my opinion, guys, you have two short squeeze potentials here, right? I'm thinking what I'm looking at is that Ape is going to squeeze first because they still have to deliver some of those shares, right? There's no volume on it. You need liquidity, right? I'm not looking to sell anytime soon, so I don't need liquidity. I don't need volume, right? The shorts, they need liquidity to be able to cover their short. They need people they're willing to sell. If there's no volume, they have to come in and create the volume by buying and moving the price up. And then if the price gets to somewhere where people want to start selling, then they can sell, and then they'd be able to get those shares, right? That's how I think it would go. But yeah, two short squeeze potentials here, AMC and Ape. They both have extremely high short interest. 1 billion Ape authorized. All right, remember that's how much was the total authorization for now, right? That's what AMC and Adam Aaron hold in their pockets. And you had 516 million and minus the 1 billion. So they're holding 483 million shares that could be potentially sold. All right, they haven't said when, but they can basically do it when they want. This is the whole dilution fear. But remember, this can act as a currency, right? I keep seeing that word, right? Currency. They can use it to pay down debt, and it can count as equity on the balance sheet. So I'm interested in the next earnings call to see what they're going to say about the balance sheet, because if they Ape is worth like almost $4 billion. So can they use that as credit in a way, is what I'm basically, thinking. The call feature 1/100. Is that why we see the reference right in the details to the 1/100th interest, because there's a call feature on it? That's still a question mark. Does AMC have to sell Ape to retail, right? They probably don't have to sell it to us. Now, what if Adam Aaron, what if he sells it to a private investor or to investors? Just as an example, he sells 100 million Ape at $10. That's $1 billion that he can use for paying down debts, for to use as credit, to use in ways to help the balance sheet. All right, that's my idea right now, my theory, because AMC has a $5 billion debt. And the AMC credit cards, from what I know, are coming. They're in the works, and they need a base of money. Ape currency equity. Can they use that as equity? Can, if they make a sale where they, just privately sell it to an institution or whatever? He's done it before. He did it with Murdoch, right? Where he sold them the 11 whatever million shares, and he took that money, and then, the stock price did go up after that. I don't know if it was because of that, or sorry, no, that's my mistake. Actually, when he did sell that, it was at the worst time because AMC was in the 70s, 77, 72. And then in the morning, he sold the 11.5 million shares, right? And then the price came down to like the 40s, 50s. And it took a couple days, couple weeks in order for the price to move back up. But, these are some of the thoughts that I've had over the weekend. And, the thing that really just caught my eye was the currency part, and that they can count it as equity on the balance sheet. But I'm lit because this is the short squeeze potential right here, right? When you have a stock that has a lot of short interest, that's when they're mostly at risk because they're all piling in. And again, if there's no liquidity for Ape, then how are they going to cover? All right, that in my opinion would be a way faster squeeze that we can get higher numbers because there's no options chain. And then, guys, that's all I have for AMC. But if you want to stick around, something that I jumped into with a small amount, I'm not going crazy, but it's going to be Cfvi. Heard about it yesterday, and I've known about this stock, but now I know what could be the potential catalyst. You have the news. This is the news and why I believe it's going to move up, because Andrew Tate has been banned from, almost every social media website that I know, and he's going to Rumble. Rumble is a social media platform as well, but they're more like willing to let people say what they want. It's more about like free speech on there. And you see that it had a big move today, right? It already started. I didn't think it was going to happen this fast, but you already have some people making money on it, all right? So you got some call options here. But yeah, the catalyst is because Andrew Tate is moving there, all right? And remember what happened with DWAC? It's, people are calling it the Tate effect. And remember what happened with DWAG when Trump announced that he was going to be on that media platform or whatever? The stock went absolutely nuts. Andrew Tate has a big following, so I expect some moves. And like I said, I got in today, and I think this thing has some room to run if we can cross above $12. So I will be watching that in the next couple of days. The volume was there today, although the RSI is super hot, so it might need to come back down, right, and retrace a little bit before we get moving up. But if we can crack $12, that's where I think you're going to see a lot of volatility. And the highest peak was 1850. All right, so I'm looking at the first level right here of 1350, and then 1550 and 1850. We'll have to see what kind of movement happens because Andrew Tate, again, has a huge following. So that's just the bonus part I wanted to throw in there. And, that's what I got for you guys as far as the information. Thanks again for coming by, guys. Hopefully this helps. Hopefully you get something, value that you didn't have, and now right? And if you haven't heard about CFVI, or if you kind of heard about it, well, that's the summary, right? It's because Andrew Tate is the catalyst. And I'm just looking to get in and out and, ride the momentum wave. And that's all I'm going to try to do. But yeah, I'm still holding my apes, holding my AMC shares, GameStop. All right, guys, I'm all about the retail investors. I believe we will win in the end. And, I love you guys too. So catch you guys in the next video. Peace.